it's a fantastic time where you can still be in the driver's seat. If you wait until you find out the results is going to be favorable for you after the election, by that time it's going to be too late and the competition is going to be way too high. And I'm just going to quote Ramsey here, but he says, "Date the rate, marry the home." And so I just want to echo that to people and say, hey, if you can wisely afford, a little bit higher of an interest rates are just going to ebb and flow. It's just a natural
Yeah.
course of the markets.
Alrighty, folks, this is what we call the hub call. This is where we take professionals from Fresno, California, talk about what's going in my local market, and we talk about the broader market as well. We always go in the order that people show up, and today, Ty, you were first. How you doing, buddy?
I'm doing great, man. Good to be here. Happy Monday.
Happy Monday. Thank you for that. And Pat, how are you?
Plus, couldn't be better. Thank you for asking.
Awesome. Well, Pat, I'm going to go to you first because we have seen a shocking move in interest rates, and now it's only been the last 48, hours, maybe 72 hours. So maybe there's not enough data yet. But I'm curious, what is the public saying? Like when you're talking to buyers and or sellers, do they even know that mortgage rates shot up a lot in the last 3 or 4 days?
Yeah, that's a fantastic question. So yeah, I mean, unless you are, in a position like yourself where you're constantly looking at the market, or if you're in a position like where you're a real estate professional, you've kind of heard down the grapevine, so to speak, the chirping, right? But people really don't know what to do with that. Not until people start thousands and the hundreds start to move and actually start making decisions based on that. They're really, really just kind of like reactionary more than anything. And
Yeah.
so I think, that has partly to do with, whenever we're on a show like this, we're giving out people advice and things like that. People are still timid and they don't really react. So with boots on the ground, that's kind of what I'm seeing. A lot of people are just kind of like, oh, okay, that's interesting. And, they've heard little things about it, but they're not making any meaningful
Yeah.
actions.
It's really funny. Again, when I try to do that sometimes is go out and just talk to random people
Everyday
and
people.
yeah, that aren't reading financial news every day, right?
Correct.
And I would say most of the average folks think rates went down, right? They hear the Fed cut
Yeah.
and they think rates are lower, right? Because
Right.
the Fed controls mortgage rates. Everybody knows that. That's not how it works. But that's okay. Ty, what's going on in your world? Again, we did see mortgage rates come all the way down to 6.1. They're now at 6.6. Any change in the last 48 hours?
No, and to echo Pat, unless you're in the day-to-day trenches like we are, and it's interesting because people that are a part of the One Rental at a Time community, people in the coaching networks, masterminds that I'm involved in that are realtor, investor hybrids, they're watching it because I think, they're guided by caution of don't get overextended in a flip deal. Don't pop the champagne yet. It's not, there's who knows what happens with rates. And so two things that I'll share on my showings and activity of stuff that I'm representing, just regular retail listings. I saw a significant uptick in showing and interest, inbound calls from realtors calling our office, wanting, availability, and then even listings that were maybe a little sluggish or flat, getting action over the weekend where they normally maybe were quiet. So I think the consumer isn't aware that even right now I'm looking at, like CNBC this morning, the 10-year was up,
It's
as an
over
example.
4%. Yeah.
Yeah, today, yeah, over 4%. And so I think there's a disconnect, and maybe, I also too, there's probably some pinned up demand. I mean, I think it was a really slow summer. So I think even still people are like, screw it. If we can find the right house and the payment's right, we'll figure it out.
There you go. Well, Matt, I'm glad you're here, buddy. I wanted to talk to you this morning. We saw a violent move in mortgage rates on Friday. Looks to be following through on Monday, meaning we're going higher from here. So we've been talking about purchase activity, showings, open houses with Pat and Ty, but I want to know about your phone because it blew up when rates got in the low sixes. Have you noticed a change this weekend? Did the phone ring less this weekend, or what happened?
It's interesting to see because I think that stuff lags. I caught the tail end of what Ty was saying, where like the average consumer gets the news
They don't
pretty
know.
late. because
Yeah.
mainstream media and their reporting is late. Even some of the numbers, like the weekly mortgage numbers that are even a week old, like a week old mortgage data right now
It's old.
is very off, right? Friday, terrible day. Today we're 24 basis points worse. And
Oh,
so,
wow.
you know, that 6.54 or whatever it is, Mike's going to go to 6.6 probably,
Oh, for
after
sure.
today. And what I think that the ORaaT audience should be like focused in on, which I think to be the case, is even this incremental increase in rate is going to kick out a bunch of the fringe buyers.
Yep.
Which makes it great market for somebody who seriously wants to buy, an investor that wants to buy, or my people that are looking for a primary residence. Some of them are in this space where it's like, I don't have to move, but I want to move. Do it when you can get a deal. Do it when the market feels a little bit cooler. Like I've never seen more great inventory 30, 45 days in the market. It surprises me, honestly, some of these neighborhoods where only 3 or 4 or 6 months ago, nothing stayed on the market for more than 7 days. Now something nice that's priced lower than it was back then is on the market for 47 days. And like, I've got a client who was in contract to buy a house. It didn't work out because roof problems, negotiations, whatever the case may be. She said, Matt, down the street, I can get 200 square feet larger for 30 grand less. And they've been on the market for 74 days. So maybe it's even 40 grand less. And so it's going to be a great time to be a buyer, because of the fact that like these winter months are slower anyway. And you throttle back demand just a little bit by kicking rates up from 6 to 6.5. And it's going to be deal season for anybody who's serious about getting a deal.
No, absolutely right. And again, if you want to get a 6, you can. Just got to pay points, have the seller pay points, buy downs, whatever you want to call it. This is, I said it, I think 8 weeks ago, might have been 10 weeks ago. We've entered a buyer's market. Buyer's market is still here. This jump in interest rates makes it a buyer's market. What does that mean? It means track days on market, write disrespectful offers, follow up. It takes work to get a great deal, but they're out there. I got a note from some of the other day. The house was listed, I think it was 312. They ended up getting it for 261 or something like that with credits and all these things. They're happy as clams, right? They got it for much less than they thought. This is what a buyer's market looks like. And it takes work and all of that. Ty, when you look at what's going on, you know, where are you playing in this market?
For sure. No, we're active. Buy box is active, and put a deal under contract last week, working on another deal this week, kind of over the weekend, something that'll carry over. Yeah, we're active, and I would say it's just cautiously active, smart, you know, like strategically active, and not getting over our skis and getting too, you know, exuberant and excited about anything. You know, because also too, especially if you're fix and flip and all that, you know, again, what are interest rates going to be in December? What are interest rates going to be in January or February? Like everybody thought we'd be 5.75, or we were going to be definitely under 6 by, you know, by right now. We should be first week, second week of October. Oh, we're going to be sub 6, right? Based on the way momentum was going with the Fed. And here we are at 6.5, 6.6. Who knows, right? How it finishes this week. I will throw one other curveball here, Michael, that I think is significant. We don't talk about enough, and I'm no expert on it, but I know you know more than anyone here. A buddy of mine in Silicon Valley, Alex Lear, really strong agent, San Carlos, San Francisco, San Jose, also in the East Bay as well. Very active. And one of the things he said is when the stock market's up, which again, stock market's been incredible this year. He says that the level of buyer confidence, because I'm selling 500, 600, 700, $800,000 houses. He's selling 1 million, 2 million, 3 million plus. And he says, if the stock market's up, there's this level of confidence, not even so much because they're tied to Silicon Valley, you know, or, you know, RSVs, RSPs, whatever the thing. RSUs. Yeah. Right. So even beyond that, just the consumers feel more confident when the stock market's up. So it's a weird
Yeah,
housing market, man. It's
the
as
wealth
weird as my
effect is real.
camera pixelating.
Yeah, the wealth effect is real. And I get asked all the time, why is San Jose setting records? And I'm like, folks, do you know that I think it's the average NVIDIA employee is worth 10 million bucks?
Wow.
That's why San Jose real estate is so bananas, because of stocks like that. And then you throw on Facebook going from $90 to 600 or whatever it is. Lot of stock market wealth. So Alex is absolutely right. When stocks are high, you do get that positive wealth effect, and you get that feedback loop. People sign up for big mortgages. Pat, I wanted to go to you and ask you a question. I was hearing a lot of people say, I'm going to wait till after the election, after the election, after the election. You and I haven't spoken in a couple of weeks. I'm curious, are buyers in Fresno saying that as well, or is that more of a Bay Area thing?
At least in my circles, I can't affirm that portion of it. My conversations really, I kind of steer it towards, hey, just make decisions based on your circumstances. But I also do add, to piggyback and echo Matt, where he was saying, hey, it's a fantastic time where you can still be in the driver's seat. If you wait until you find out the results is going to be favorable for you after the election, by that time it's going to be too late, and the competition is going to be way too high. And I'm just going to quote Ramsey here, but he says, "Date the rate, marry the home." And so I just want to echo that to people and say, hey, if you can wisely afford, a little bit higher of an interest rate, interest rates are just going to ebb and flow. It's just a natural course of the market. So yeah, that's my piece.
Yeah, Matt, one of the things that we really have to talk about is interest rates in 2025. I put something out the other day before Friday's jump, that I don't think we go below 5.8. Now the call looks great, right? I made that call when rates were 6.1.
Yep.
I don't think we go below 5.8 in 2025. What do you think?
Yeah, it'll be interesting to see, because like the plan for the Fed and the Fed funds rate is still like we just looked at it on the last call I was on, where November, December, January, still like one cut per meeting. And so like long term, it looks like we're still going to have this rate cutting cycle. Eventually the 10-year follows. Eventually the mortgage rates follow. I know, like, we tried to warn people about September 18th. Like, rates have gone up almost like
we tried
in the last 2 weeks, right? But over a longer time horizon, I think it might have been me and you talking about the end a year from now, the end of next summer, and I was thinking 5.5 to 5.75. But you're right, like with rates popping right back up, it's a reminder to everybody that, one, they're going to move down slow, and just because they move down some doesn't mean they can't pop back up if there's these data pieces that say job market strong. We don't need as much of this, lower rate stimulus to pump an economy up that seems to be doing just fine. And, who knows if there's revisions, who knows what happens. Like, and that's the funny part too about looking farther out, is there's plenty of data between now and January that could change. There could be, 4 total rate cuts in the next 3 meetings. There could be 2. But I think that for most people, it's going to be a healthy, slow 15 months of, now we're 6.6. And so now if we're looking at the end of 25 and 15 months out, like that might slowly go down to that, 5.75, 5.8, like you talk about. Yeah.
I think it's really, the market just needs to heal itself, right? And we can't have these rates flying, up and down. We know that rates matter. Good news is the election is almost here. It's almost over. I think there's a lot of people that just like, I'm out of it. I'm going to wait. Then we have, Thanksgiving. Then we have Christmas, New Year's. Spring selling season is going to be wild. I think by then we have rates in the low 6s. We do have that pent up demand that has been building since, the summer. So it's going to get interesting. Ty, where can people find you in closing thoughts?
ty@tylg.com. Yeah. And I'm doing retail brokerage. I'm still listing properties. I help a lot of people get in and out of deals. Anything real estate. I treat email like text messages. Would love to hear from the One Rental at a Time community.
Awesome. Appreciate you. Pat, closing thoughts. Where can people find you?
Sure. homeswithpatkim@gmail.com. homeswithpatkim@gmail.com. And no, just date the rate, marry the home.
There you go. Matt, closing thoughts. Where do they find you?
Quick closing thoughts, or it doesn't cost to be ready, right? Do the work and be ready, because something comes across, and I've seen it too many times in the 10 years I've done mortgage. People like, oh my gosh, this is perfect. I can't believe that I can get this for 680 in this neighborhood. And then by the time they're pre-approved, by the time they're ready and they got their agent, it went pending. So
Yeah.
get ready first, then go out and do your hunting. Greatmortgagebroker.com, fill out the quick form, and we're happy to help you in 48 states. Or if you email me and you're from ORaaT, matt@mtmg.com, you've got a question, you've got something you want to run by me, more than happy to help. Greatmortgagebroker.com or matt@mtmg.com.
Awesome, guys. Take care of yourself. Talk next week.
Thanks, guys.